We're now on to part 2 for Izzy's Ice Cream Parlour. And if we have a quick look back here and we have a little bit of about the business, Izzy's Ice Cream Parlour is a small boutique ice cream parlour selling cones and ice cream cakes to the public. Now, it's always important to know who you are and what perspective that you're doing transactions from. So we're going on first of all to the cash receipts journal. There's a separate video for the cash payments journal. I've got here a list of transactions, and these are for the first week of March. I've got my cash receipts journal here ready to go, and I've also got the trial balance here to use as well. Now, the first thing I'm going to do is just go through. I like to work nicely and methodical and do something like highlighting the transactions we're going to be using. So in this case, separating out between the cash receipts and the cash payments journal. So I've got my first 2 cash receipts here, which are cone sales. So I'm going to go through and I'm going to look at each of the transactions, and I'm just going to highlight those that are to do with cash receipts. I'm doing it like this because I'm doing it on an Excel spreadsheet. If you're doing on paper, you could just write R's for receipts and P's for payments against them. You could use a highlighter pen. You could put red asterisks beside particular ones, however you want to do it. So, and I've got one more here. It's not highlighting very well for me, so I'll do it like this. Okay. And I've got one more up here. So going through them all, I've now got all the cash receipts highlighted, and the ones left are going to be my cash payments, which I'll put in my cash payments journal. Just anything that says sales will normally be a cash receipt. If it says the word received, that will normally be a cash receipt. When the owner, who is Izzy, because it's Izzy's Ice Cream Parlour, contributes cash to the business, that's going to be a cash receipt as well. So that's sort of the words to look out for, things like sales, received, contributed, those types of things that give you hints. The idea is thinking, is it going to increase the business's bank account? Now, over here we have the trial balance. This is really important because we're going to use this for the particulars column. So in the particulars column, we don't write a description of the transaction. We need to write the account that it's having an impact on. Our trial balance tells us those accounts. So remember, this is the debit side, the left-hand side of the trial balance with our assets, expenses, and drawings. And this is the credit side of the trial balance with the liabilities, owners' equity, and revenue. So we're going to put in here the date, so it's March. I'm going to write in my first one, 1st of March. And my spreadsheet automatically changes into 1-mar because that's the formatting on it. Now the first transaction is cone sales by EFTPOS. So I'm going to look over here, and there's an account called cone sales, so that's going to be the most appropriate account to use. Under the reference column, I give an idea of how the transaction was taken out. In this case, I'm going to write left because it's an EFTPOS transaction. Looking across here, now the receipts and bank column often causes confusion. The rule for the receipts column is that all cash transactions always go in the receipts column, and then they are totaled and banked at the end of the day. For EFTPOS transactions, online banking, bank transfers, direct credits, those sorts of things, generally they go straight to the bank column because the receipts column is generally for the cash we received in hand. There is one exception to that, and that's if we receive 2 EFTPOS transactions in a day, then we're going to put the details in the receipts column and then put the total in the bank column. The idea is that our bank column is going to appear the same as what's going to be in our bank statement. And later on when we do our bank reconciliation statement, you'll see why this is so important. So the bank column represents the amounts of cash actually being deposited into our bank account. Now on this day, we've made cone sales and cake sales. Now the bank just sees us depositing that entire lot for EFTPOS. Now With FPOS transactions, lots of individual FPOS transactions don't actually appear in a business's bank account. So if you imagine something like a supermarket, and they will literally make thousands of FPOS transactions a day. On their bank statement, they don't have thousands of lines for FPOS transactions. They just have one lump sum of FPOS for the day. Now, with us, because we as an ice cream parlour, we're selling both cones and cakes, we might find it really important for us to keep that information separate for us to analyse how we're going. How successful are our cone sales? How successful are our cake sales? Should we be maintaining this business? What have we done that's improved that particular line of revenue? Have we had a promotion and therefore increased our cake sales? That sort of information is really important for a business. So in this case, we want to keep our information regarding our cone sales and our cake sales separately. So that's why we have them separate and we're not just putting them under one total of sales. It's all about providing that financial information so businesses can make informed decisions with what they do. So in this case, because there's two left on one day, I'm putting it in the receipts column. I'm going to put my other FPOS transaction here. So here we go, cake sales. Once again, it's left, and I'm going to put it in here. Yeah, and that means in the bank, I'm going to be putting a total of the 805 plus the 345. So that's going to give me the bank 1150. Now that's the only thing I total. Everything else I treat separately. So first of all, I'm going to process cone sales. I'm going to take out the GST. Now, this is in New Zealand, so our GST rate is 15%. And the way you need to calculate GST is always divide that amount by 1.15. You never, ever times it by 15% because that will give you an incorrect number. Adding GST is different to taking off GST. In the case, we are taking off GST, so we need to divide it by 1.15. So always use that rule. So in this case here, my cone sales is going to be 700 and my GST is going to be 105. Now I've made my numbers nicely divisible by 1.15 for simplicity. If you get numbers that aren't divisible by 1.15, you round to 2 decimal places, so to the nearest cent when you do it. Okay, my cake sales, I've got a separate. Now, these columns here in our cash receipts journal, we're going to put column headings for the most common items that we have. In our case, cake sales and cone sales are going to be the ways that we receive the most cash. So we've allocated columns to those. We have a sundry column over here for any other way. So these are for the less common items. The other tip here too is if it has its own column, so for example, cone sales, then particulars is going to match that. So cone sales there, cone sales in the column. If they don't match, then either you've labelled something wrong or it shouldn't go into that column. So my cake sales here, that's going to be 300 there, and oops, that's a 600, not a 300. And that's going to be 45 in the GST when I divide it by 1.15. Now with the date, you can put the dates. I could write 1st of March there again, or I could just leave that knowing that that there will also occur on the 1st of March. You can choose what to do. Okay, my next date is the 3rd of March. So I'm down 3 March. My computer sends it into that format. Okay, so I've got some cone sales there. Looking at those, bar for cash. So in here I'm going to write cash into my reference, and all cash goes into the receipt. So in this case, 690 here. I'm going to just pop down to my next one. I've got cake sales here. That's also cash. So there and 207. Now if I look up here, there's 2 cash transactions of the day. I'm now going to total those in the bank. And that's because at the end of the day, if you visited the bank with the cash you received, you're going to bank it in one lump sum. You're not going to bank it in 2 separate amounts. Nobody's going to line up at the bank twice and to bank amounts. We're going to bank it in one lump sum. So there it is. Now I'm going to process the rest of them. So cone sales, that'll go in my cone sales column. that's going to be 100, and under GST 90. And my cake sales for my 207 there, I'm going to have 180, and my cake sales and the GST will be 27. On that day, I've got another transaction here. Got some more cone sales. In this case, they're FPOS transactions. Now, in this case, there's only one FPOS on this day. When there's one FPOS, it goes straight into bank. We only use the receipts column when there's two FPOS like there is on this day. There's one, it goes straight to bank. Now, this is for cone sales, so it's coming out here. And that's going to be 960, and in the GST there is going to be 144. Okay, my next date is up there on the 4th of March, and this is here's received additional loan from the bank. Okay, I'm going to look over at my trial balance and I'm going to pick out the most appropriate account. In this case, it's going to be loan. So that's what I'm going to use in my particulars. Now, this one is going to be put directly into our bank. So I can use something like BT as a reference for bank transfer, or I could put BS for bank statement, something along those lines. Now, because it's going straight into our bank account, it's going to go straight into the bank here too. It's not going to go in receipts because we didn't actually get to touch the cash before it landed in our bank. Now, loans don't have GST. Now, there's three categories of things generally that don't have GST. One is wages. The other are transactions to do with the owner, so like capital and drawings. And the other one is transactions to do with the bank, so receiving loans, paying back loans, putting money into term deposits, cash into term deposits, receiving interest, paying interest, bank fees. So those transactions you have to do with the bank don't have GST either. That makes it really nice and easy because then you don't have the calculator. Now this one doesn't have a separate column, so we're going to put it straight over into the sundry column here, $1,000. Okay. The next date is the 5th. And we've got, once again, cone sales and for cash. Remember, cash always goes in the receipts. In this case, it's 6.4. Now, this is the only cash transaction on this date because the other one is via FPOS. So, therefore, we would bank that as a lump sum at the end of the day. So, the 644 goes there as well. So, the cone sales is going to go over here. So, we take off GST and that's going to give us 560. And the GST amount, therefore, will be 84. Also on the 5th of March, we've got this other cone sales. And this one is EFT. This is only one FPOS on the day, so it goes straight to the bank. It only goes in the receipts when there's two or more FPOS on the day. This is another cone sale, so it's going to go over here. It's 20 excluding GST, so the GST amount is 48. Now we've got one more transaction up here. Izzy, so that's the owner of Izzy's Ice Cream Parlour, contributed $1,000 more to the business on online banking. So put the date in, March. In this case here, we need to look for an account that represents the owner, and we've got this one here, capital. So when the owner invests funds into the business, that gets registered as capital. So that's what we're going to use in the particulars. So it's online banking. So we'll put there. It's going straight into the bank account, so it won't go into the receipts column. And capital does not have GST, so there's nothing there. And it's also going to go under the sundry. So, sorry, and I apologise. I've just realised I've done that wrong there. Okay, as you can see, I've got some formulas already in the bottom, so that's adding up those columns. So that's what you also need to do at the end, is add up those columns, and then we are done for the cash receipts journal.